What's up guys, Johan Lorenzo here. Welcome back to the channel. In this video, I'm gonna give you guys a quick little update on my new dividend portfolio, and we're gonna go over some of the most recent purchases I've made here. A few weeks ago, I only had 3 companies in this portfolio, and I just recently added a 4th one. As you guys already know, this building a dividend portfolio thing is a process. Slowly but surely, I will eventually have a solid handful of stocks in here, and we'll be printing money like a well-oiled machine. And the cool thing about it all is you guys will get to see the different strategies that I'm using to help me make this dream of having a financial freedom portfolio come true. A financial freedom portfolio is having a portfolio that generates enough money to pay all of your bills and everything else in between. Not only having all of your bills covered, but also covering the lifestyle of your choice. That is the true goal of this portfolio, and that's why I'm calling it the financial freedom portfolio. Before we get started, if you enjoy learning about dividend stocks, please give this video a big thumbs up and subscribe to the channel if you haven't. So without further ado, let's get into the video. The financial freedom portfolio is currently worth $20,424. It's grown quite a bit since the last video update, and it has a total of 4 holdings now, with the newest addition of the portfolio being Store Capital, ticker symbol STOR. Store Capital is a real estate investment trust, and if you don't know much about them, I'll leave a link down in the description below to a video I recently made so you can see what the company's all about and why I chose to invest in them. So right now, I currently own these 4 holdings: Apple, Microsoft, Store Capital, and SCHD. Apple's the one I'm really focusing on here because I really want to get this position to 100 shares. Once I have 100 shares of Apple in this portfolio, I will be able to sell covered calls way out of the money on Apple, and it can generate me an easy, and I mean easy, $50 a week, guys. That adds up for $200 a month. And the reason why this is really important here is because collecting $200 a month in options premiums from Apple will give me a $600 quarterly payment from them. Let me explain why this is super important for me. As you can see, Apple right now pays a dividend of 22 cents per share. For me to generate over $600 quarterly in dividend income from Apple, I would need roughly 2,800 shares. That is about $450,000, give or take. That would take me a really long time to get to, but if you do what I'm doing here, you can generate this type of income with Apple shares for a fraction of the cost, approximately $16,000 to be exact. And all of that money I'm collecting from the options premiums will be reinvested back into this portfolio. That will give me a huge snowball effect, and I'll be able to compound this portfolio much quicker than the average investor. And doing this strategy with Tesla alone has generated me a great amount of passive income. As you can see in my Robinhood account, I made almost $2,300 this week from collecting premiums. And with the other 100 shares I own in my Webull account, I've made over $16,000 throughout the last 3 months collecting premiums on Tesla. So when done properly, it's safe to say this will give you a slight edge against the everyday regular investor. As of right now, the portfolio isn't generating much income. It's generating about $321 a year. As I add more shares to these holdings, this number will increase dramatically, especially once I start selling options on multiple holdings. But all in all, right now I have every single month covered from just 4 holdings. If I don't add another single company to this portfolio, I'll still collect some sort of passive income every single month. It really isn't difficult at all to build a portfolio that pays you every single month. Obviously, my goal here is to add another handful of companies throughout the year and ultimately have anywhere from 20 to 30 companies in this portfolio. With everything being on sale at the moment, I'm just going to continue to dollar cost average into this portfolio and build up my positions. The truth is, guys, nobody knows where the bottom of this market is. We might be at the bottom right now. Nobody truly knows. The most important thing you can do throughout all of this, especially if you are a long-term investor of these companies, is to continue to dollar cost average and grow your positions. As a long-term dividend investor, these are great times for us to be investing because we will be earning more dividend income for a way cheaper price. Remember, when we buy shares of these dividend-paying companies, we are actually buying income. The more shares we buy, the more income we generate. And when you have the opportunity to do this for a 10, 20, or 30% discount, you should be drooling at the mouth of how bad you want to buy shares of these companies. Because these are the opportunities we all wait for as dividend investors. In a nutshell, buy the freaking dip. But always remember, I am not a financial advisor. This is not financial advice. I want to thank you all for watching. I'll catch you on the next one. Peace.